And hello traders, and welcome to another video. So in this video we are going to go through the PDF that it's named Trade Plan Builder. So basically guys, in this video we are going to talk about how can you make a trade plan, how the trade plan should look like, what are the tips and tricks when you're making a trade plan, etc, etc. So every trader needs to have a trade plan before he starts trading. So trade plan is basically everything in forex, in trading. So you cannot really trade without a trade plan because it would be just gambling. So you need to know what you're doing. You need to know your edge. You need to know where and what is your advantage and what is your disadvantage, and you should know everything before you even start trading. So I have a lot of people that they start trading, they learn certain things, and I don't know, some situation occurs in the market and they just they don't know what to do. They're like, what should I do here? For example, should I leave the trade over the weekend? Should I close it? Should I don't know, should I execute here or should I do this? So all those questions should be already answered before you start trading. So you need to have a proper trade plan in place so you can trade properly. Trade plan needs to be tested first. That's really, really important. So you need to test the strategy that you're trading, and then you can make a trade plan out of it. And that way, guys, you are sure that you're doing the right thing. So let's give you an example. Every business in the world, not trading, okay, but every business out there has a plan, a business plan, okay? So you are going to need the trade plan if you want to trade, okay? That's simple as that. You cannot trade without it. So I think this video is gonna help a lot of you guys. Maybe some of you guys are new, maybe some of you guys already have a trade plan, but you are finding the ways to improve it. Maybe you have missed something, you never know. So yeah, you're gonna want to watch this video. So yeah, let's start. Again guys, it's the simple concept, the same thing. So first I recommend you reading, okay, and going through this PDF first before you watch this video, so you can sum everything up. You can really see what we're talking about in the PDF, and then go ahead and watch this video. So I'm not gonna read through everything, because if I do and I start explaining everything, it's gonna be a really long video. I do not want to do that. So basically I'm gonna talk only, and I'm gonna leave the reading to you, okay? So basically, what is the trade plan? As I explained, guys, it's your guide to trading forex or crypto or whatever you're trading. So you cannot basically trade without the trade plan, because if you do that, it's going to be gambling. That's called gambling. That's not trading, okay? So every trader needs to have a trade plan in place before even he starts trading. So before you even think about starting to trade, you should already have predefined trade plan for everything that you do. So next time when you are trading live, you do not need to ask yourself questions, and you're not gonna have doubts. So you're gonna instinctively know what you're gonna do in each situation. So something is gonna come up and you're like not gonna be like, oh, what should I do here? You're already supposed to know what should you do there, okay? Oh, news are in half an hour. Do I close my position or not? What does your trade plans tell you? So everything that you do should be based on a trade plan, because that way you're making sure that you are doing the right thing, that you're following the process. So trading without a trade plan, guys, is again pure gambling. Let's move on. How trade plan should look like, guys. You can basically read through this text, and you are gonna gain every little information that you need. So basically, you do not need, a messy and scattered all over the place trade plan with 100+ pages on it. You want something clear, you want something predefined, something short that you can go back to, learn from that, etc., etc. So how can you create a trade plan step by step? Okay, so let's start. First step is, of course, find a profitable strategy. Okay, so you need to find a strategy that you're gonna trade. So of course you cannot trade without a strategy. You need an edge in a market. You need to know what is your advantage. So first of all, you need to find a profitable strategy, and that's your first step basically. So again, guys, if you want to learn hybrid strategy, I do recommend checking the link that we have down below the PDF, and you can join our community. We have a profitable strategy that you can backtest for yourself. So again, you do not need to believe me on my word if the strategy is profitable or not, because everything can be backtested. Okay, so you're gonna have data of everything. You can backtest years and years, and you can see the strategy is profitable. You can see that we have trades in live market as well all the time. So you're gonna prove to yourself that the strategy is profitable. So hybrid strategy has predefined rules for everything. So again, guys, execution is robotized. Execution is basically done for you. Trade management as well. So you're not deciding where you want to get out of the trade. The strategy does that for you. So that is basically eliminating a lot of decision-making process out of your trading, and your trading is basically a lot easier, less stressful, and you're trading with logic, not with emotions. So first step, find a profitable strategy, guys. Second is to backtest it. Okay, it is really, really important that you can backtest the strategy. So what I do not like, for example, about lower time frames is that you cannot really backtest a large amounts of data. You can, but for example, smart money traders love to day test, or I think they call it day testing or forward testing. So where they're gonna back test maybe this week, and then something like that. So I don't like to do that. So I like to have large amounts of data, and a hybrid strategy can be back tested years and years in the past. So that's really important for you guys, because if you start to trade the strategy that you have not back tested, you're gonna have problems. Okay, so why? Because if you backtest a strategy and you see and you prove to yourself that the strategy is profitable, you're gonna have confidence in the strategy. Thus, you're gonna have confidence in yourself and the trade plan that you're using. So it's gonna be really better if you have those large amounts of data for yourself, because again, guys, backtest is everything. For example, I'm going to give you an example. So one trader, we have on the left a trader who doesn't backtest, okay, and we have a trader on the right who is doing the backtest, okay. So let's say, for example, you're backtesting on 1 hour time frame, and we backtest 1 month for about an hour, okay. So if you're an advanced trader, it's going to be less for you to bar replay the month and backtest 1 whole month. It's going to be maybe 20 minutes, half an hour. But if you're not experienced with backtesting, it's going to take you around 1 hour to do everything right. So let's say we do 1 hour a day, and we do 1 month a day. So if we just focus on doing backtesting 1 hour a day, okay, in 12 days, we are going to be able to backtest 1 year full of data, okay? And the trader who is doing backtest is basically going to gain knowledge about the price action, different patterns, different things that work, different things that don't work. He's gonna have the large amount of data that he has done only for 12 days. And then on another side, we're gonna have a trader who basically doesn't do backtests and he only live trades. This trader on the left who doesn't backtest is going to need a 1 full year to have all of that data. And the trader who is backtesting only 1 hour a day, and he's doing 1 month a day, is going to be able to do that exact work, exact same thing in 12 days. So do you see power in there? So one trader is going to be able to sum everything up and have that amount of data in just 12 days. Another trader is going to be taking him 1 full year. Do you know how much experience and knowledge you're gonna gain if you are doing your backtesting properly? It's really astonishing, okay guys? So this is why you should be backtesting. There are traders who are telling you do not backtest, you do not have that experience, it's not the same when you're live trading. Of course it's not the same, but better to make mistakes when you're backtesting than to do that on a live account. Those are the same traders who tell you that before you start trading large amount of capital, go for a $100 account, or demo account or whatever. And they tell you don't go for a demo account. That's not the same as a live market. I mean, yes, that's correct. Okay, the emotions that you're gonna feel on demo account are not the same that the emotions you're gonna feel on $10,000 account. And the emotions that you're going to feel on $10,000 account are not the same that you're going to feel on 200K account. It's going to be different. Large amount of capital, more emotions. I'm going to give you an example. I don't know if you know this, but prop firms, like FTMO or MyForex funds, they were not functioning like this like 10 years ago. Okay, there were no prop trade firms that giving you, like challenges, evaluation processes that you can pass, make 10%, you pass, verification stage 5%, boom, you're a FTMO trader. That sort of things didn't exist like 10 years ago. What existed is the prop trade firm were existing then, but they were functioning a little bit differently. They were functioning like, there were a trader who is trading and he has like 2 years of track record that he's profitable and everything, and he needs to provide that data, his track record, to the prop firm. And then the prop firm reviewed that data and they saw that he's a profitable trader, and they decided to give him a little bit of more capital to trade. And he joins that prop firm. Let's put it like that. So what happened now is that same trader that has successfully made money for 2 years of consistent periods now is failing. And why does that happen? Is because all of a sudden he's trading large amounts of capital, and emotions on large amounts of capital are not the same, okay? And they figure out that they have a little bit of problem, and over the course of time they change it a little bit, okay? So of course we all know FTMO does challenges, evaluation processes, because people fail a lot, so they make money that way. We all know that, of course. Large amount of traders are failing because let's be realistic, guys. Everybody's just gambling. They're no real traders. So I wanted to give an example that yes, emotions are not the same when you're trading the demo account and when you're trading the smaller account, when you're trading the medium account, when you're trading the larger account. The emotions are different, but it should not be like that. Okay, it should be always same, because guys, you're trading one strategy, and that's only our feelings and our emotions. It doesn't really matter if you look at the percentages. It really doesn't matter if 1% is on 200K account or 1% is on demo account. The goal is still to make percentage, to execute your edge over and over again. And trading, and how that changes when we're trading the different amounts of capital is basically our perception and our emotions, okay? And it should not be like that. This is why I'm telling my students that they should treat demo as a real account, okay? A lot of traders, come and they take demo account and they play with it. They do not have emotions while they're trading on a demo account. They're not serious when they're trading on the demo account. And because it's play money, of course, and it's like, a test for them, a test. And if they make it successful, they're going to change to real account, real capital. What happens here is that they're going to pass. Let's say, for example, you want to trade prop firms capital, and then you want to take a demo account. And I advise all traders before they trade, before they take the FTMO, let's say FTMO account, they should be doing at least, 3 times on a demo account. And they should set rules. So you're not going to trade demo account like your real account. If you're preparing yourself for a funded capital, you should be doing like something like this. You should be doing one demo account, and you should be like, making 10%. You should set yourself the same rules that you're gonna have once you do a real thing. So 10% amount with 5% daily drawdown, 10% daily max drawdown. You need to have 10 trading days for FTMO, and you need to make 10% in 1 month, so 30 days after your first trade. And you should do that the exact same thing on a demo account. And if you pass, you should do that demo account 3 times. And if you pass it successfully 2 times, and let's say, for example, once you fail, you're ready. You can take the real account. If you pass it 3 times, perfect, you're ready as well. If you fail it 2 times and you pass it once, you need to practice a little bit more. But what happens, okay, let's get back to it. What happens when people trade on a demo account is that they play with demo. They really do not care about the money. They do not really care because they do not have emotions while they're trading on really fake money, okay? And they have success because they do not have emotions. And they make some percentages. And they start to be profitable on a demo account. And then they say, I'm ready. I'm ready to do this. And then they change on a real capital. And what happens when they change, when they go for a real capital, is that our emotions are starting to play with them. All of a sudden, they do not trade the same. All of a sudden, they were taking a little bit more aggressive entries on a demo account. And right now, they do not want to take those aggressive entries because, they're a little bit more scared. And many, many things like that. So the approach that they take is not the same. Okay? And of course, the results are not going to be the same. And this is the mistake that people are doing. And I keep saying the exact same thing over and over again. And the wrong thing is that a lot of mentors are teaching those things. They're telling you should go for a demo account and you should take a little bit smaller account. You should prepare yourself for a bigger account. It doesn't make any difference. It should be the same. Your trade plan should be the same. Okay? Everything needs to be the same. The feeling of larger and smaller capital is only in your imagination. It's only your emotions. Okay? Everything should be the same. If you have a profitable strategy and you have back-tested the strategy and you have made a trade plan that you're going to follow, you're going to execute it exactly the same on a demo account, on a small account, medium account, large account, whatever. Everything is the same and it should supposed to be the same. So next time, guys, when you're trading on a demo account and you're preparing yourself for maybe, let's say, funded account or whatever, treat it seriously. Do not play with it because it's fake money. Your results are not going to be the same once you change from demo account to real capital. Okay, guys? So remember that. It really doesn't matter if you're trading smaller account or larger account. Of course, it's 10 times harder. Just imagine let's say you're trading 200K, and let's say you're risking 1%. That's $2,000 in a single stop loss. Let's say your stop loss is 10 pips. I mean, you have $2,000 in a stop loss of 10 pips. It's scary, right? It can be scary. And if you win money, woo, you're all of a sudden 10% is $20,000. It's a lot of money, you know, and emotions are gonna play with you. And that's why it's important to have a strategy in place that's gonna reduce those emotions. And this is why it's better to have rules in place that you are going to follow. So you're not trading blindly, and you know, there's a lot of discretion, there is a lot of room for mistakes. There is a lot of, you know, things that can go wrong. If you have predefined trade plan that you have tested and you have large amounts of data that you know you have proven to yourself are working, you should be good in the long run. Okay? And this is why it's important to have all of those things, guys, so you do not fail as traders. Okay, guys? So backtest is really, really important, because all of the data that you're gonna gather through backtest. All of the mistakes that you're gonna make through backtest. All the new patterns that are really shiny, good, high probability, etc., you're gonna find them through backtest. Backtest is important. If someone tells you that backtest is not a real thing, it's a simulator, he doesn't know what he's doing, and he's just lazy because he doesn't want to do backtest. Those are the same people that are telling you, go prepare for a demo account, you know, because, you know, emotions, everything should be the same, you know. So yeah, that's pretty much it, guys. Backtest is really, really important, and it should be done every single day if possible. Okay, so yeah, second step is backtest. So really, really important thing, guys. Do not miss this step. If you have not backtested, go backtest. Okay, it's really, really important. Again, if you're trading lower time frames, you're not gonna have large amounts of data. I do not like that about trading on a smaller time frame, but it is what it is. You know, if you're also trading on multiple time frames, that can be a little bit of a struggle, because, you know, there's a lot of confluence involved in your trading, and there's a little bit more discretion involved in trading, and factor of luck is a little bit more present. So if you can, what would be good is to focus on one pair and focus on one time frame. It would be really, really good. It would be really amazing if you can focus on one time frame and one pair, so you can master that time frame, so you can master that pair. You're gonna be way better. You're gonna be better than 90% of people. You're gonna have more advantage over everybody. Believe me, if you focus on those two things. But I don't know which strategy you're trading, what are you doing, you know, so I cannot, you know, tell you if that's the right thing or the wrong thing for you. You need to check that out for yourself. But, you know, it would be good if you can backtest, if you can trade one trade, pair and one time frame, and then, you know, as experience you move on. It's better to be master of one pair than, you know, trade 20 pairs but don't know anything about them, you know. So yeah, let's move on, guys. Third step is ASR. For those who do not know what is ASR, it's basically advanced self-review. So once you have found a profitable strategy and you have backtested strategy, you are going to do as ASR, advanced seller review. So what you're going to do is go ahead and, let's say, for example, you have backtested 1 year full of data on your USD. You're going to go back, and you have started in January. You're going to go back to January, 1st of January. You're going to start, and you're going to review every single trade that you have taken. And you're going to write notes, and you're going to see what are the good things, what are the bad things about a trade. You're going to basically write every little thing down, and you're gonna put it in possibly a journal. If you are a member of Hybrid Trading FX community, you're gonna have premium journals, so Excel spreadsheets, etc. In this community, we have a free Excel spreadsheet, but it's not advanced, so I think that you can still use it. I'm not sure, because that's backtesting. I'm not sure, but if you're a trader if you're from a hybrid FX community, you are going to have access to our premium journals and backtested spreadsheets. So you're going to see everything is basically automatic and done for you. You're just going to write down the data. So for example, this is your USD, stop losses was here, pips was here, percentage of the account was here, my account was here, commission was like that, and journal is going to do everything for you. It's going to calculate all the data for you. It's going to calculate are continuations more profitable on that pair, are reversals more profitable on that pair. It's going to give you nice graphs, that you can compare strategies. You can basically, it's going to do everything for you. You're only going to write down from the backtesting that you have done on TradingView, for example. You're going to take that data, review every trade, put all the details in the spreadsheet, and basically this is the process of ASR. You're going to review the trades on TradingView. This is also where you build knowledge about the price action, about everything, and then you're giving that data to Journal, and Journal is calculating that data for you, and it's giving you results. It's giving you results, and you're seeing what is profitable, what is not profitable, etc., etc. So I think that you can do that also in the Notion template. So I'm not sure. Yes, you can do it, but it's not going to be calculated automatically for you. You can do ASR in the Notion template, but you need to calculate all those things yourself. Okay, so it's a little bit of a struggle, but yeah, it is what it is. So that's basically a process of ASR, guys. The journaling is also some kind of ASR, let's say, for example, you have traded this week and you want to, journal everything, what have you done throughout the week. That also can be a process of advanced self-review, because, you're reviewing yourself, you're reviewing your things that you have done right, things that you have done bad, things that you have missed, things that you can improve on, etc., etc. So the process of ASR is basically, you doing advanced self-review, whatever on your trades that you have taken live or your backtesting data. So when you have done, your ASR, when you have collected the data from your backtesting, with that data, you can actually make a trade plan. Okay. So the fourth step is pair characteristics, guys. Really, really important. As I told you, basically, price action is the language of the market. Okay. And as I told you as well, every pair has its own language. So of course, I do understand that learning price action can be a little bit of harder task. And I told you, it's the same thing as you're learning the new language. You cannot expect to, take some private classes with someone. Let's say, for example, your native language is English and you want to learn French, and you never heard about French or whatever, but you want to speak it. You found a girlfriend, let's say, for example, you found a girlfriend that's French and you want to learn French. Do you think in 1 month you can attend, even if you have a session every single day, one-on-one session, let's say one-on-one session with a teacher, and you're learning every single day? Do you think you can have a full conversation with your girlfriend or friend or whatever on French? It's not possible, right? You need time, you need practice. So it's the same thing with price action. You cannot expect to go through the PDF, watch the videos, do some charting and know everything. It doesn't function like that. You need time and you need practice. This is why it's important to have a routine, guys. Routine is the single most important thing that you can do for yourself, to build routine. Okay, with routine comes everything. When you have a routine and you have your daily tasks, you know what should be focused on today, what you should be focusing on tomorrow, and you do work every single day. Just show up, do some work. It's gonna be better. Okay, so characteristics of pairs, guys. This is basically how you know the nature of the pair, what pairs like to do, what pair doesn't like to do, how pair moves. So every little single thing about a pair should be done through pair characteristics. Again, guys, all of these things I'm just going to briefly explain what are they, and basically what you should be doing, but I'm not going to go through a lot of detail and show you actually how you can do pair characteristics, because again, this is just the basic knowledge about everything. that we're summing up here in this course and these PDFs. And if you want everything detailedly explained in, you know, with examples and everything, basically advanced knowledge, you need to join our community. Okay, so Hybrid Trading FX, you have a link in you have the link below also, this PDF, so you just click the link and join the community if you want to learn more about every topic. Basically we have, you know, 10 times more, even more education than, you know, this. But yeah, basically I'm just, you know, going through explaining what it is, but I'm not actually showing you how can you do it. I'm showing that only to my members. Again, it would not be fair if, you know, I share that here as well. So yeah, trade management as well, guys, you need to have it in your trade plan. So, you know, read this. You know, there are a few different ways how you can manage your trade. Again, with hybrid strategy, everything is robotized for you, so you're not basically deciding where you're gonna get out of the trade. Strategy does that for you. It's reducing a lot of emotions from your trading. It's really helping you robotize the whole process and, you know, making your trades easier. So I would advise if you can do that as well. So, you know, strict rules in place that you always gonna need to follow. So market decides where it basically takes you out to trade, and you're not deciding that, because, you know, again, making a decision as a trader is a hard thing because, you know, emotions tend to play with us. So it's better to have, you know, strict rules that you're going to follow. It's going to be, your trading is going to be a lot easier. So risk tolerance in trade plan is also important, guys. You can read this whole text and you're going to know what I'm talking about. So for example, I don't know, some traders have the rule that if they lose, let's say for example 2 trades in a row today, they're not going to trade. For me, I do not like that rule. I do not agree with that rule. I do know the benefits of that rule, and I think the rule is actually good, but for beginner traders only, the traders who cannot control themselves, and then they need to have that rule. So, you know, rule is I'm gonna take 2 trades. If I take 2 trades today and both of those trades are losses, I'm finished trading. You know, I don't trade anymore. For me, again, I do not like this rule, because, you know, that rule is for beginners only, and it's a good thing for beginners, because it's capping you to 2% max a day. It's not allowing you to, you know, blow your account because you're getting angry and you start over leveraging, or you stop blowing your account. You know, it's really helping you in that way. But that rule is only there for, you know, people who cannot control their emotions. If you're a trader and you take 2 losses and you have executed the trade plan, I mean, it's all good. I know what I'm trading, you know. I know that out of 10 times that I take my pattern, let's say 10 times I take my pattern, 6 times, let's say 6 times in a row, I'm gonna lose. I'm still gonna execute the same pattern for the 7th time. I really do not care. Why? Because I know that I'm profitable with that pattern. Okay, that's my trade plan. That pattern is in my trade. I trade it because I win money with it. That's me executing my advantage. So I know if my pattern has 40% win rate, only 40% win rate, but it has massive risk reward. I compensate my win rate with risk reward, so I really have a massive trades because I'm letting my profits run. You know, when I win big. I'm looking to scale in the position and whatnot. So it can happen that I have 40% win rate. So out of 10 trades, I'm gonna lose 6 and I'm gonna win 4. But when I win with those 4 with one, only single one, I can compensate all of that money that I have lost, and I'm gonna win more. So this is why I really do not care if I lose 2% or 3%. I'm executing my edge. I'm executing that I know what is working for me. So why should I stop when I take two losses? Of course, if you have, like, if you're trading with FTMO, for example, you're capped. You cannot lose more than 5% daily because they're going to take away your account. But if you're trading on a real capital, you know, it doesn't make any sense, you know, to cap yourself like that. Only if you have problems with emotions and only if you get angry and then you're gonna start over trading and whatnot. But for professional traders, they do not have that rule. They're not gonna have that rule because they're executing their edge, and they know that if the pattern that they're trading has 40% win rate, it can happen that they're gonna have 6 losses in a row. That can happen. And for some traders, that's really tough emotionally to handle. But for people who have basically backtested everything, they know what they're trading, they have trade plan, they have done their SR, they know that that's perfectly normal. So for them, it's okay, because they know if they take 7 trades, on 7 trade, that is going to compensate all of those losses they have lost, and they're going to win more. So this is why basically I really do not care if I take 2-3 losses, because I know I'm executing my edge, so I really do not care about. But again, I do know that that rule is really good for beginner traders who have problems with emotions. So again, guys, pair correlations again. So let's say, for example, you're trading EURUSD, you're trading GBPUSD, and you're trading AUDUSD. Pair correlations can happen, and you're gonna have the exact same pattern on all of the 3 pairs. And right now, let's say you're risking 1% per trade, and there are pair correlations, and all of a sudden you're not going to risk 1%, because you're going to have your pattern that you're trading, and it's going to be the same pattern on all of 3 pairs. Okay. And then all of a sudden you're not risking 1%. If you lose 1%. You lose right now, if you need to execute all 3 of them, you lose 3%. So you need to think about those things now before you start trading. What happens if I get this? If I see that scenario, what happens if that happens to me? I should be thinking about those things way in advance, because it's always better to be prepared. Now, what does the saying say? It's like fail to prepare, prepare to fail. Okay, so you always need to be prepared for those things. Okay, so you should, in those cases, when you have 3 trades and pair correlations the same, you should be taking all 3 of them, or take nothing. You cannot choose, because your approach is going to be discretional if you choose, because pair correlations are basically, if the pattern goes, all 3 trades are going to go, or if pattern fails, all 3 patterns are going to fail. All 3 pairs are going to finish in stop loss in -1%. So it's going to sum up to 3%. So does your risk exposure allows you to take that loss? Are you going to take 3% loss or not? Is that right for you? So if you start to win and everything goes in your favor, it's going to be massive profit. But if you lose, you're not going to lose 1%, and you're going to lose 3%. And if you're capped and if you're trading on FTMO, 3% is a lot. Okay, so why did I mention that you need to take all of them or not take nothing? And why you should not choose? Why that is discretional approach? It is because pair correlations are the same. They're gonna have the same direction, but slightly different price action. So what's gonna happen is, maybe you're gonna get stopped out on your USD, but GBPUSD is gonna barely miss your stop loss and continue in your favor. And what happens if you choose between those 2? What happens if you choose wrong? If you took EURUSD, but you didn't took GBPUSD, and GBPUSD is going in profit, and you have, so you're gambling a little bit, you're guessing a little bit, and I don't like to guess. Okay, so this is why I do not like discretion when I'm trading. I like to think in probabilities, and I like to have everything, based on data. It's better for me, really, so I can relax more. It doesn't bring me stress, because stress can be huge if you're choosing and you choose wrong. And then you're gonna beat yourself up. Oh, I choose wrong. Why did I do that? And then your whole day is gonna suck. You're gonna be devastated about that. So this is why it's important not to choose, guys, not allow discretion in your trading. You should pick all, or you should ignore all. And this is why you should be thinking about all of those things. I can name a couple more. There's a lot more actually, but video is gonna be damn too long. I'm not gonna talk about them. I just set up a few examples that things that you should be looking at, thinking about when you're making a trade plan so you're well prepared for those things when they come to you when you're trading live. So basically, the point of a trade plan is to make sure that before we start to trade live, we already have all predefined rules in place that we're going to follow, so we make sure we do not gamble when we're trading, that we're executing our edge actually. So 7th step is a checklist, guys. For the beginner traders, this is really like cheat code or something like that. It's gonna allow you, basically it's gonna keep your emotions in place, okay, if you have a checklist. So as you guys know, we tend to have emotions while we trade, and we tend to have, for example, let's say fear of missing out. You want to get involved in a trade because you think about making profits, you think about making money, you should not be getting involved in a trade, but still you start, your hand goes and touches your mobile phone, opens up a trading view, opens up a MetaTrader, you accidentally start, calculating your lot size, and you start putting your pending order, and then you leave your phone, and then you feel like I should not be doing this. You know that feeling? That feeling can be basically fixed with the checklist. Okay, so you're gonna write down the checklist and things that you want to see before you execute a trade. So, for example, I'm gonna give you a couple of examples. So, first thing that you're gonna ask yourself is, did I forecast this trade in advance? And you're gonna have yes, no. And if you have not forecasted that trade in advance, you already know you have not prepared yourself for that trade. So it's better not to take it. If the answer is no, you're not taking the trade. If the answer is yes, I did my forecast, I already prepared myself for that trade plan. I have a trade, I had a little bit of time. I think about it, I check my emotions, I check technicals, I make sure everything is good. I had time to prepare myself, so I did my forecast. Let's check this, okay? And then you're gonna ask yourself the second question: would I take this trade if I traded $1 million account? Would you take it actually? So let's say, for example, yes, you check it, poof. And then the third question: is this trade in my trade plan? Do I trade this? Check. And then maybe some pair characteristics about pair. Maybe you want to trade on your USD. Does this happen? The pattern that I'm trading, do I see it? So checklist is really, you're gonna make a checklist based on your trade plan and your strategy that you're trading. So you're gonna have certain questions that you're gonna ask yourself before taking an entry. So that way, if you check something no, you're just ignoring the trade and you do not take the trade, and you just do not care what happens next. That's it. You're respecting your trade plan, and you should feel good. Even though if you, let's say, decided you saw a setup and you wanted to get involved, and you check your checklist and two things didn't tick, and you decided not to take the trade because your checklist says do not take the trade. You didn't take the trade and trade goes in massive profit. What do you feel? I know you feel like, why didn't take it? You start calculating your risk reward, use a risk reward tool in TradingView, and then you start calculating, I would be so much money right now, I would be up so much money now, okay, I would be this amount of money I would be earning now, and blah 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 blah. But this is the wrong thing. You should not be focused on doing that. This is the completely wrong mindset. You should be happy that you have respected your checklist. You should be happy that you have respected your trade plan, okay? And when you take a setup that, let's say, for example, second scenario, you see a trade, you want to get involved. You check your checklist, things don't tick. Two things doesn't tick on your checklist, and you're like, I'm gonna still trade it. I'm still gonna take it. I'm gonna leave the checklist. You take it and you finish in profit. It takes you out in profit. Take profit hit. You should feel what? Good or bad? If you answer good, then you have a problem. Okay? Because you do not focus on the short-term money. You do not focus on short-term. This is trading, guys. Okay? You need to be having a mindset, and you should be focused on a long-term success. And you're not gonna win money in a long term if you're not focusing on your trade plan, and if you're not respecting your trade plan and checklist. So the answer is you should feel regret. You should feel bad about taking that trade, even though if it finishes in profit, because you didn't respect your trade plan. Because what can happen now is that you have won money and you feel good. You feel good in this moment, but it's gonna mess up your future. How, you say? Tomorrow you're gonna see exact same thing, the same aggressive trade that is not high probability. But you know what? Now deep down in your brain, in your subconscious mind, you remember that once you have did the exact same thing and it turned positive, it turned good. And then you're gonna repeat that thing. You're still gonna take that same shitty setup, and this time, well, you're not gonna be lucky. It's gonna be a loss, and then it's gonna be a loss. It's gonna be a loss and loss and loss, and that pattern is gonna keep repeating and repeating over and over again. Okay, so this is why you should not be doing that, guys. Checklist should be in front of you. Like I said, when I started out trading, I had my checklist written in front of my PC. When I was sitting down, when I was doing my work, I had my checklist in my telephone, also in my notes, and I had it in a piece of paper in front of my screen. Of course, after some time, after some experience, you're not gonna need it. You're gonna have everything, in your brain. It's gonna be like walking a park. But again, if you're starting out and if you have problems with the emotion checklist, it's really, really important. And you should always follow the checklist, what checklist says, because you're focusing on a long-term success and not short-term luck, guys. Okay, so let's see, do we have anything else? No. So guys, again, here you're gonna see that we have links. Click here to join. It's gonna open up our website, and yeah, you can choose the package and join the community if you want to learn more about everything. Of course, again, I told you, I'm just speaking about those things in short context. Some basic things. You're gonna already have everything that you need to be focusing on, okay, with this course, with this education. But again, if you want more, if you want it more advanced, detailedly explained, etc., you should be joining the community. So another thing that I didn't talk about here is journal, and I'm gonna briefly go through the journaling process, okay? So because I want also to talk about that, or you know what, I'm gonna leave that for the Notion template. So in the next video we're gonna go through Notion template. I'm gonna showcase how can you use basically a Notion template, how can you journal your trades, how can you do your ASR, etc. I'm gonna just go briefly explain to everyone how can you use it properly, and then we're gonna talk about the trade plan. It's better that way, and this video is also not going to be too long. So yeah, that's it, guys. Hope you liked the video, hope you enjoyed it, hope you learned something new. Again, guys, if you have any questions, just send us a message in Discord, in community, and yeah, we're going to be more than happy to reply and help everyone. So yeah, that's basically it, guys. Have a nice day, and yeah, see you in the next one.